Bitcoin is currently at a crucial price point. Today, I'm going to discuss what this means for Bitcoin in both the short and long term. I'll also cover some major breakthroughs in the overall markets, which will significantly impact Bitcoin and altcoin prices moving forward. So, make sure to watch this video from start to finish. Welcome back, everyone. My name is Chris, and I bring you daily cryptocurrency videos to help you make money in this market. If you're new to the channel, be sure to subscribe and activate the notification bell right now. As we can see, after struggling for 4 consecutive hourly candles, Bitcoin has finally managed to break through the orange line at $68,500. This level has been crucial for a long time, and staying above it is very important. Although the current 4-hour candle is below this level, looking at the hourly chart, the previous hourly candle found support here. With the next hourly candle closing in 8 minutes, we'll see if the bulls can rally and keep us above this point. Just because we're below it now doesn't mean the candle will close below it. As seen before, we rallied and closed above it even after dipping below. In the shorter time frames, I believe Bitcoin will continue to grind upwards, but Ethereum and altcoins are likely to lead the next major push in the crypto markets. Bitcoin remains a safe bet and is expected to continue its upward trajectory. Additionally, after the MTGOX dump, which caused significant fear about Bitcoins being sold off, we saw a price drop. However, we're now slowly regaining momentum. Before the MTGOX FUD, Bitcoin had good momentum, reaching as high as $70,600. If we can return to these levels and break through the previous swing high, the next targets to watch are $71,500 and $72,000. From there, we'll see what happens, but I expect mostly sideways movement with a gradual upward trend. This upward trend is fantastic news. Now, let's discuss Ethereum. Ethereum has been performing well. 2 days ago, it approached my orange line but was rejected before reaching it. However, it formed a channel and then experienced a massive pump followed by consolidation. This pattern typically leads to another price pump, continuing the previous upward trend. I believe my prediction from 3 days ago is still valid. Ethereum will outperform and pull altcoins up with it. Institutions were caught off guard by the approval of the spot Ethereum ETF, which will start trading soon. They didn't have enough time to accumulate Ethereum, so what we're seeing now is a slow accumulation phase that will likely drive up the price. The next resistance level to watch is $4,000. In traditional markets, things are also looking promising. On the daily time frame, we are just below the orange line at 5,334, which is the previous all-time high resistance. We have 2 weekly candles below this point, and we want to see a trend shift to break through and continue upwards for the S&P 500. Consolidation below massive resistance often leads to an upward pop. On a more macro level, SAR Scientific announced a Bitcoin treasury strategy. This lesser-known stock had a fantastic run from 2016, peaking at $155 in 2021, but it has been trending downwards recently. Yesterday, it saw a big green candle because they announced a $40 million Bitcoin purchase. The stock jumped about 40% following this announcement. This trend suggests that more companies will buy Bitcoin to pump their stocks, and eventually, they might also buy Ethereum as the ETF is approved. Looking at the Nasdaq 100, it's at an all-time high relative to the Dow Jones Industrial Average. The Nasdaq, composed mainly of tech stocks, is outperforming older, more industrial companies. This is significant because crypto is tech. As the Nasdaq rises, so does speculation, which typically leads to higher crypto prices. Lastly, BlackRock, the largest asset manager in the world, is adding their spot Bitcoin ETF to their funds. This means that average investors who put money into these funds will indirectly invest in Bitcoin. This inclusion will bring more mainstream investment into Bitcoin and, eventually, Ethereum as well. Overall, the outlook is very positive for both Bitcoin and Ethereum. Keep an eye on these developments, as they indicate continued growth and adoption in the crypto markets. They prefer to buy it and let it sit. BlackRock has now included Bitcoin in 2 of their funds, the Strategic Income Opportunities Portfolio and the Strategic Global Bond Fund. When investors buy these funds, they are also indirectly buying a bit of Bitcoin. This gradual adoption will have a significant impact over time. People are often too focused on short-term gains, expecting Bitcoin to pump within a week. However, What we really need to see is global adoption, building piece by piece. Bitcoin is evolving into a stable store of value, rather than a vehicle for massive short-term gains. It's unlikely to provide 100x returns in the next 3 years, and it probably won't 20x your portfolio. Altcoins are more suited for those kinds of gains. Bitcoin, on the other hand, is meant to preserve wealth and grow steadily over time. Looking at the broader market, the entire crypto market cap has just begun its first macro bullish expansion in 3.5 years. Using the logarithmic Bollinger Bands and the Vortex indicator on the 2-month chart, we see that the last time we had a similar shift, it led to a major bull run. History might repeat itself. Additionally, if you're looking for the best deposit bonuses, you can get $30,000 on Bybit, $60,000 on OKX by joining with a specific link, and up to $40,000 on BitGet. Check the descriptions for these offers. Regarding the future potential of Bitcoin, many speculate about a $1 million Bitcoin by 2030 and even $10 million by 2035 to 2040. However, let's focus on the present. Pension funds and major institutions like BlackRock are accumulating Bitcoin, often without making headlines. BlackRock is in discussions with multiple countries and government sovereign funds to acquire as much Bitcoin as possible without causing price spikes. This behind-the-scenes accumulation by large entities underscores the long-term potential of Bitcoin. Thank you for watching this video. I'll see you in the next one. News about major institutions buying Bitcoin often doesn't make headlines on mainstream channels like CNBC or ABC. Even in the cryptocurrency space, it sometimes goes unnoticed. This lack of attention is baffling. I often feel like I'm just talking into a microphone without being heard, but I know some of you are paying attention. When Bitcoin hits $100,000, there's going to be a huge wave of FOMO, fear of missing out. Despite all the news about accumulation and institutional interest, many people are still hesitant. We've seen Bitcoin nearly triple in price over the last 2 years. Historically, Bitcoin's price continues to rise after each halving. Knowing this, what's stopping more people from entering the market now? The potential for gains both now and in the future is substantial. Yet, people lose faith so quickly in this market. Major institutions and central banks are accumulating Bitcoin. For example, 19 central banks have reportedly invested about $1 billion in crypto assets each. What more proof do you need to be bullish? Here's a specific report. 19 banks have exposure to XRP and a total of $10.27 billion in crypto investment positions. Bitcoin and Ethereum are the top holdings in these banks' portfolios, with 31% in Bitcoin and 22% in Ethereum. This data is not just hearsay. It's documented in a report, which I'll link in the description below for those who want to read it in detail. For those still skeptical, consider this. When institutions and banks are quietly accumulating crypto assets, it's a strong signal of confidence in the market's future. Don't wait for the next big price jump to realize the potential. Now is the time to understand the market dynamics and consider your position. Thank you for watching, and I'll see you in the next video. Almost 90% of the reported exposures are concentrated on the top 20 crypto assets. XRP makes up only 2% of this exposure. While 2% might seem small, it's significant considering the total amount held. It's noteworthy that these banks chose XRP, which is a substantial figure in this context. For those not looking at the screen, of the total crypto assets held by these banks, 2% is XRP, 1% is Cardano, 1% is Solana, 0.4% is Litecoin, 0.4% is Stellar Lumens, 2% is Polkadot. The real headline should be that these banks collectively hold over $1 billion worth of crypto, with 50% of that in Bitcoin and Ethereum, alongside some altcoins. This would have been a spectacular news title, but instead, many focused only on XRP. The chart also shows Bitcoin and Ethereum as the top